Hello guys, welcome back to this channel. So let me show you how I was able to catch more than 1 to 6 RR trade using this checklist here. This is an updated checklist, so let me show you how the trade moved. This is how the trade moved. It was very quick, and then the take profit closed overnight, as you can see. So this is how the market is currently. So currently this is how the market is in real time. So ideally it went for 1 to 6, which is always my go-to, but the objective of the trade yesterday was to bring an account from drawdown, and that is exactly what I did with even a big stop loss compared to normally what I would always wish to have, because the account was so big, and therefore I just wanted to give it room to breathe. Ideally the stop loss should have been here, just below this would be nice, and that should be a very tight stop loss that I'm used to. But since the account was relatively bigger, I decided to give it 18 pip stop loss, which was extremely unnecessary, but I just gave it for the sake of for the sake of things to do with spreads and etc, since I was using relatively a bigger stop loss that not all the time I use. So this trade was taken here, and here it's the proof, though I don't like showing proof because I don't owe anybody, but this is the proof. This is the AUD trade last update. This is how it went, more than 1 to 5. This was before it went to 1 to 6. So this was the trade, the buy trade. So it was a very good profit. The goal was to elevate the account to the account was in drawdown, so I felt that there was need to bring this account back from drawdown, and therefore that is why I was taking it. So that is how the trade went. So today I was looking at different trades, but there was no good trade so far. So basically this is the checklist. You can join the Telegram, it's for free. I'm just building a community. I don't have a course to sell you right now, maybe in future I'll have. So for now, just join and we trade together. Now this was extreme confirmation trade because I didn't want to take stop loss. Obviously it is out of my control, but I just didn't want it, so I opted to go with extreme confirmation. It means that I was able to follow this updated checklist from the top here to down here. Ideally we should be able to get entry at the position number 5. Now this is an updated list, updated checklist, because I happen to designate it into different strategy, whereby I used to have swing, the continuation, the intraday, and the day trading. Now for the last like about 1.5 weeks, I've been doing lots of back testing to show exactly to be able to come up with a summarized version of the whole strategy. Everything is the same, except that it has now been a little bit summarized, so that you can choose to, after you get your entry, you can choose to swing the strategy, you can choose to swing the trade, or you can just choose to take a day trade or intraday. So all of them are already factored here, and that is why I did not go for entries that are below 30 minutes, though it's possible, but you don't need that. And the reason why I prefer to enter on 30 minutes is because I'm looking at it long term. Because if I'm looking at it on 5 pips, 2 pip stop loss, I will be having very ridiculous lot sizes, and therefore I may have problems with trading large account in future. I'm still a small fish in the pond, but already preparing for the future. So that is why I opted to just stick to 30 minutes, and the lowest I can go is 15 minutes. If I wanted to take trades, I would have taken on 15 minutes right here. Same way, if I wanted to take on 5 minutes, I would have just taken a risky entry somewhere here for about a 5 pip stop loss, because this is the market is ideally shouldn't take this low. If it takes it, it's just a liquidity point. So as you are aware that if you go for smaller stop loss, or if you over refine, it means you are providing room for for more losses and higher risk to reward, which ideally this strategy is already set on risk to reward that are more than 1 to 4. 1 to 4 is enough to cover everything, so we go, I've updated this so you can go BE at 1 to 2, and then you don't take partials. I don't like partials because partials dilute trades. So let's analyze this trade from higher time frame, so that you can see how this updated version, and this is updated courtesy of one of the members here that we've been trading with. Yeah, it's called Mr. Snow Vibe is the one that we've been liaising with, so that I can harmonize this strategy for the sake of better entries and other better part of the strategy. So that is why I decided to do it for him and others who have been asking for a more refined option, or just for clarity, so you don't have other strategies to use here. The goal is very simple. Just look for one day time frame to close 3 times, or at least it should close in your direction. If you just want to take trade from one pair, let's say you are dealing with just 2 to 3 pairs, just always wait for 1 day time frame to close in your direction. You don't need to wait for 3. 3 is for somebody who trades very many pairs like myself. I trade major pairs, JPY pairs, and more so AUD pairs. So basically this is 3 sets of pairs that I look at. So that is why I placed, to limit myself from taking mini trades, I just placed 3 time frames, 3 days to close in one direction, signifying that on 4 hours there is enough change of character, break of structure, and therefore I'm just in continuation, because this is squarely based on SMC strategy. SMC trading strategy checklist. So this is the strategy is squarely based on that, and it's a developed strategy from all these strategies that I've been sharing in this channel combined. So you don't need to worry about knowing that we are having continuation or any other thing. So like this trade, there's possibility of today, this is now where discretion now is applying. Like I said, there's a part I've introduced here for discretion, this part number 3. So because I realized that it is nearly impossible to have a fully mechanical, so I've introduced discretion so that we can introduce other concepts of SMC, like order blocks, identifying correct order blocks, supply and demand zones within the trade, so that you are able to get very good entries and also avoid losses where it should be. So something like this. So this was an order block. I was looking for it to be filled, and then after being filled, I waited for 1 hour to close in my direction, and then to even make it more precise, just a retest on 1 hour close. This was 1 hour close, was not enough. I waited for another 30 minutes to align, and then I entered upon alignment, and therefore you can see it was minimal drawdown. Now, like I said, the ideal stop loss should have been here, because I don't expect it to go below this point for nearly a 1 to 10 risk to reward. So let's start from the top. Like I said, 1 day time frame closes at least 3 times in one direction, or on an already trending market, it closes in opposite direction. We used to trade when it closes on opposite direction, but for it to be general, please trade after close in opposite direction after it has been followed by a close in our direction. So let's say this was a daily time frame. Let me delete this one. So let's say this was a daily time frame and we already in buy market. I'm assuming this is obviously 30 minutes, but I'm just offering as an example so that you don't get confused. and this video is a little bit detailed because this is the first time I'm talking about the updated strategy with an already taken trade. So let's say this was day 1, day 2, day 3. It means now we are supposed to be looking for trade here on day 4. Now if day 4 closes bearish like this, we normally take trade the following day. Now I advise you to not take trades on this particular after this close, then the second day you take trade. No, wait for this two to close on opposite direction, and then wait again for another one to close in your direction, and then now you trade on this day. And as you can see, this was daily, this was enough move. So that is the basic concept. So that is why it is having both of them written here, so that I don't need to split biases. So it is on an already trending market. If the market is already trending on one direction, then it closes in opposite direction, followed by a close in our direction. We are buying. When it closes in opposite direction, we wait for it to close again on our direction to signify that already 4 hours has already tapped on fair value gap or any POI and is already back to, it has already changed even character on, let's say, 15 minutes, 30 minutes the next day, and therefore it is already buying. So we just join in and we go with the momentum. Now then we wait for first 4 hours to align and close in overall direction. Now this 4 hours alignment, you can check it immediately. The next daily candle starts, the first 4 hours of the day should be enough. So the other 4 hours candle should just be pulling back so that it can give you good risk to reward. So only wait for the first 4 hour alignment. That is just enough. So if first 4 hours alignment occurs early, let's say it occurred on the first 4 hour of the day or the second 4 hours a day, it means that it would be early. So just wait and look for entries on London Open. So if London opens and the trade is ready for entry, just chill out a little bit and wait for the first 1 hour candle of London to play out. If, for example, you are opening your chart and already it is giving you entry, it is already done with this part, which is 1 hour candle is already closing in your direction. So just chill out and wait for the first 1 hour candle of London. Same to New York. If session open, don't just enter on the first 30 minutes, or even to make it worse, basically don't enter on the first 30 minutes of the session open, even if the other entries are already occurring and the only thing you are waiting for is entry. So just wait for it to maybe do manipulation or anything else, and then if it closes in your direction, if everything is already checked and what is remaining is entry, and the next 4 hours is basically starting the session, like let's say for the New York, especially the New York, you don't just enter on New York open. You wait for it to 30 minutes to close in your direction, if at all it wants to close your direction without manipulation, and then now you can enter on if the high of that particular candle that has started the session in 30 minutes has been taken. If the high or the low of that candle that started the 30 minutes session has been taken, it means you will be abiding by this side. Now you need to rewatch this video so that I'll be providing other examples of this summarized version, and in case of any development, because I'm still backtesting and harmonizing the data, I'll be updating you guys. That is why I didn't have so many uploads last week, because I was harmonizing the data so that I can come up with a more refined version of this strategy based on people's request in the group section. Now you can join there. I also offer Zoom calls, and the Zoom calls are free. So just join there and then we catch up. Now when you after seeing the first 4 hour alignment, if there's no first 4 hours alignment and you're expecting trade, just relax and wait for the 4 hours to align. After the 4 hours have aligned, then you can start looking for entry. Now apply discretion before proceeding to entry. If the first 4 hours alignment heavily moved and left OBs or supply and demand zones that should be filled first. Now let's assume that now this is an example. Now this was 4 hours that moved in this rapid movement, so you can see basically it left some demand zone here that needed to be filled. So even if the first 1 hour of the next candle, let's assume that this was the first hour of the next candle, closed bullish, we wouldn't enter because we needed to at least come to this particular supply zone or demand zone, demand zone or the order block that is somewhere here, the order block that is somewhere here, for it to be tapped, and then now we can start looking for entry. So I allowed for discretion because I've concluded from my backtest that it is nearly impossible to get good trades when you are only focused on purely mechanical. So whether you are seeing that something may not be right, but you still go ahead and take the trade. So that is why I say that even if the trade was started to move from this point, just relax and wait for the next 4 hours. It's going to pull back into these imbalances and then move. Now I'll explain this when I'm breaking down this trade. Now same to this entry here. As much as I took it, this was the first one. I think the 1 hour candle was here. This was 1 hour, and then I was looking at half of it, and then when half of it was tapped, like this fair value gap here was tapped, then I waited for another 1 hour to close in my direction, and then again I still went ahead and waited for the first 30 minutes to close because I didn't want to undergo a loss. So it was extremely confirmatory entry. You can go that extreme, or I was also having the ability, I was monitoring at the same time of taking trades somewhere around here. Of course you can't just take at the half, not all the time you will be filled, so you can always take it just anything above, just slightly near half of the 1 hour. This is 1 hour candle that closed in my direction after filling these imbalances, and as you can see, as much as it played around, it obeyed and gave me the needed trade. So I've allowed room for discretion so that this strategy can develop and keep evolving. So there is so much confirmation that I placed yesterday, so that the trade may try and be on my favor in the long run. Now another thing is so we apply discretion just to see if the first candle move, like if this is the like let's say this was the first alignment in 4 hours. So if this is the next candle, we need to get entry. Just apply some little discretionary. You can decide that okay, I'm not going to take this trade unless it pulled and filled this imbalance, some imbalance here. Or you can conclude that since this was as aligned and as already tapped this imbalance, I'll be waiting for 1 hour of this candle to see if it doesn't tap here or it taps, so that you can get your entry. I hope that is clear. So wait for the first, after applying discretionary if needed. There are some times whereby this is the first 4 hours, and then this is the second, this is the 4 hour that aligns, and then this is the next candle. You can see that there was no imbalance that was left even after alignment. That means that we may not need to apply discretionary. We just need to wait for the entry. The discretionary is only advised when the candle that aligns moved rapidly. If it moves rapidly and this was our aligning candle, it would be irrelevant for me to get into such trade. Maybe I would have waited for it to pull down here so that I can proceed with the entry, or I could have also let it create a base, and then as you can see a rally, so a tap onto this same supply zone, and then I would have looked for 1 hour to close in my direction. If this was 1 hour that closed in my direction, so I would have still marked it like this. This is 1 hour that has closed in my direction. Now if 1 hour closes in your direction, we expect that the next 1 hour candle should take its high before you get the entry, because that is also another criteria that I've added here. If it doesn't do that, then you have to go until the last section. So let me explain that. Wait for the first 1 hour candle of the new 4 hour candle to close in your direction. So let's say that this was our 1 hour candle that closed in our direction. So we wait for this 1 hour to close. That would be nice. And then after that, what do? Then enter on about half of the above step 4's 1 hour candle. This 1 hour candle that was closed, we enter on about its half, because we are expecting a pullback. And only enter if its needed high or low was taken. Like in this case, if this was our 1 hour candle, from this point to this point was our 1 hour candle that closed bullish because we are buying, what do we need to do? We need to see that this next candle here that printed red should have taken its high first before starting to pull back. If you've watched other strategies that this summary has been derived from, we always wait for this 1 hour, something like 1 hour. So I want you to be waiting for 1 hour to be taken. Now there are situations whereby it may not be taken, and therefore this thing may keep just dropping like that until the end. Now to mitigate that, then if that one does not happen, if that one does not happen, then proceed to step 6 below. Now what does the step 6 says? You enter when 30 minutes candle closes in your direction and its high or low taken by the next 30 minutes candle, that should be your entry candle. Now let's say that this candle's high was not taken and it was our 1 hour. So the next, let's assume that this is our next 30 minutes. So this 30 minutes closes bullish, that's fine. Now we can only enter if this high has been taken. So that means that is where your entry would be here. This is where your entry would be, and your stop loss below here. Alternatively, you can still wait and get another entry when the next, let's assume that the next candle pulled back, so this would be so long, so maybe you would wait. If it takes the high and then now start to pull down, that is when you can take your entry to get a very small stop loss and a very good risk to reward. Alternatively, if you are impatient, you can just place your buy stop there or wait for the high to be taken and then get in and then ride the process. Now that is the checklist in a nutshell. Like I said, I have been backtesting all the other options of entry and models. That is why I came up with this. I'm still harmonizing data, and this strategy will keep improving over time. It's only fools who do not change, and I don't want us to be fools. So if you are also trading with me, if you see something that is important, just let me know in the discussion section of the group, particularly in the comment section, and tell me that what if we apply this. I'll just go back to the drawing board, backtest that you've seen, and then see if we can add it or implement it. If you see something that we can remove, you also let me know. Only fools do not change, so we should not be fools. Let us change. So when you enter, just expect to SL to be few pips above or below the 30 minutes or 1 hour entry candle. If you choose to enter on 1 hour, when 1 hour's high was taken or low was taken, and then you decided to enter without looking at the 30 minutes, of course that is a little bit riskier compared to when you wait until you get confirmation 6. So I expect you to have a tight stop loss too. Now TP and risk management is at least 1 to 4 RR, and BE at 1 to 2 RR. No partials. And then for psychology part of this strategy is that just expect to take 10 trades as the rule, and if the analysis is right, it will play out perfectly. If the analysis is wrong, it won't play out, even if you have a big stop loss or you have a tight stop loss. Now the expectation is that you should always be expecting a loss, because it is logical that the stop loss distance and the take profit distance, they are 2 worlds apart, and the shortest distance is always the stop loss distance, and therefore always expect a loss, and a win is just a favor. So don't turn favors to right. People don't turn favors to right. That is where now we start losing this our beautiful world, when you think that wins are just favors given to us. So if we think that we should always be getting wins, it means that we should always be getting favors, and favors are not right. If you want right, you can always expect to live. That is a right to live according to Geneva Convention. Now that is the right. Should be right to breathe. Those ones are rights that you can always demand, but on trading, wins are just favors. So let me break down that trade and see how it worked. It worked yesterday on Monday. So if you look at this market, this was yesterday. So let's cut that particular point. Now this market has been going down, and then now it started going down, up again, then it started now moving downwards. So I was just watching this market. So what happened here is that I noted that we saw 1 2 3 4. This one now closed in our direction. So Friday there was on Thursday you could look for trade here, though now this is a ranging market, so it's unnecessary. That is why I didn't look at it. Now on Friday there was trade obviously, but I was occupied. On that day I did not trade, so I will also break down this trade after this video, so watch it out again. So if we just look at it from this particular angle, you can see that we've already had 1 2 3 candles moving in our direction. That means that this direction now is no longer bearish, and therefore now it is bullish. So this was on Friday. So on Monday I just went to 4 hours because checklist number 1 has been confirmed. Now using my using general SMC, you can see that already the market is moving up and down. This is what I was saying, that you wait for it to tap these zones, and then we have now up, down, then now this high has been taken. So it means that now this market is already bullish. So I'm expecting that maybe we can have a push down, or we can just proceed, and then this would be our demand zone to keep pushing this market upwards. So that is 4 hours. So let's keep seeing the market. Now we see that was some fair value gap being created there, because the market always behave like that when Monday opens sometimes. So you can see that this was the first candle of the day, and it did not align bullish, it aligned bearish. Now what about this next one? This next one was at 4 a.m. my time. So at this particular point, I don't take trades. I just said that according to this new strategy, I don't take this new update. I don't take trades. I will wait for London open. So market has already aligned bullish. So this was the alignment, just to confirm. This was the alignment when this high was taken. That was the first alignment. So from London, I'll be expecting to take trade. So let's go to 1 hour. So this is now what we are playing with. So it could be testing here, and then we keep going. So let's see. London opens at 10 a.m. my time. So this is 9. You can see this is 9. It has already started testing the demand zone for the order flow, and you can see the market closes bullish. So the market has closed bullish. I did not take on open because it had the ability to keep going down, so I did not take it there. So this is the first 1 hour of the session. Now if this is the first hour of the session, it means now I can look to see, because now we've seen that first hour has already aligned, and then I've also looked at it, and the 4 hours, if you look at it at the 4 hours perspective, it has already come and retested this zone. So there was no much discretion to apply, because if this was the 4 hours that moved here, I would have applied discretion. So 1 hour has already closed bullish on my side, so I can choose to enter. I can choose to enter on half of this, about half of that, we don't take entries at session open immediately. Like I said, if it is London, wait for the first 1 hour or 30 minutes to form, because I was expecting a buy and therefore I'm expecting it to give me 30 minutes buy. So normally I always target 1 to 6, but like I said, this case I was just targeting a 1 to 4. So if this was my target, a 1 to 4, that should have been the entry. Now what happened, you can see it went high but never came back to retest this zone. So just provide yourself with the ability to miss trade too when you just go for the half zones. So you can see now the market started dilly-dallying around that zone, and then this was the test of that zone, and this happened when the 4 hours started here. The next 4 hours started here, and then this was into the next 4 hours. So you can see that already the 4 hours had already, the next 4 hours had already started after London opened. So this has closed bullish in my direction. So even if you wanted to add more trade, this would be ideal. And see, this one has already done that, so you could add another trade, let's say below here, which I don't recommend because this trade has not even moved unless you are placing small positions. So this would be the right stop loss somewhere here for 17 pips, and target at least a 1 to 4. All this I didn't do because I really wanted confirmatory. So immediately this was 1 to 4. There should be a 1 to 4, at least a 1 to 4. So immediately this happened, so I went to 30 minutes to go and look for even further confirmation. Further confirmation is saying that we have already gotten a 1 hour close, but 30 minutes has not closed in my direction, has not taken the high of the next candle. So even if you wanted to trade, this should be the next. If this was taken, then there was possibility of entry. And I think this time I was not in the chat, I was talking to someone, on a student of mine on the phone. So that should have been a very good entry. So you can see came back. Then now when I came to the chart, I found it to have already come back to retest this 1 hour that we just formed here, and retested it. So this is where now I got involved in the trade here when this high was taken. This 30 minutes candle closed, and then this high was taken. Like I said, this would have been the right stop loss, but I just gave it 18 pips, sorry. I gave it 18 pips, very unnecessary. I'm always used to taking tight stop losses, so that should be a 1 to 4. 1 to 4 is thereabout. Now ideally, if somebody got it from this particular trade, this one here, the one that was inside here, this one should have been a little bit higher, for a 1 to 6. So with that, now this is how the trade moved. As you can see, that was overnight and already went to break even, and then that is it. So you can see that this other trade that was taken at the mid of this should have given a 1 to 6, which is always my go-to trade, risk to reward. And then this other one that I took yesterday, this one is what I took, gave 1 to 4. And then the other one also 1 to 4, though its stop loss should have been somewhere here, but we just give it room to breathe. So that would be the trade, and like I said, the market went even higher and higher, because this strategy allows you to both swing if you want to swing it, because I still believe that this is just pullback, and therefore we should be getting continuation. So if this was the original trade of 1 to 4 that I took yesterday, so far it has already moved to 1 to 6. That is always my preferred. But now, since I had already anticipated that when I get a 1 to 4, about 1 to 4, I shall have recovered this account from drawdown, and that is exactly what happened. So I'll be breaking down the Friday trade and show you that because I just saw that it even had early stop loss, and then another one was a very good winner for more than 1 to 5, just to prove that this strategy, unlike any other strategy, is not holy grail.